Welcome back to Stocklabs, another market recap. We are already into the month of April, second week of April, and market was a little bit choppy in the past week. It was kind of, not as strong as it has been in, the last few months or several weeks. So, there was more chop than anything else. As far as the major ETFs went, Qs were down 0.8, S&P was down 0.9, Dow down 2.2%, and Russell was down almost 3%. So soft across the board and softer in the more economically sensitive stuff. So Russell, Dow, tech was the strongest, down a little less than 1%. Top performer again for the week, oil up 4.5%. So crude has been very strong in 2024. And then especially on this last leg up since maybe the beginning-ish of February or whatever, there have been hardly any real pullbacks in crude. Gold also up 4.5% for the week. Both of these commodities having a good year and also outperforming equities. So if you're a gold and oil kind of guy, then you're having a good time this year. Bonds, bad week, down 3.4% on TLT, also down 7-8% in year-to-date performance. So rates starting to kind of bust loose. That's kind of going hand in hand with the commodity move higher. Stocks have, not really blinked yet at that, but we'll see if they do. If we look at our leadership stocks, they did okay this week. It's kind of mixed. Facebook up 8% for the week, kind of out of nowhere, but any one of these has been popping off on any random week and keeping everything sort of stable. Amazon up 2.6%. This has kind of been a little bit of a stealth run for Amazon from about maybe 140 to 185 the last few months. I don't really see that many people talking about it as much as maybe like Facebook or Nvidia and stuff, but quietly Amazon sort of been making a move. Microsoft up 1.25 this week, basically still kind of up here toward record highs. Microsoft has never really backed off this whole run. And what else? Google was only up, Google up 1%. Not that much compared to the others, but it, compared to what the NASDAQ did, it's pretty good. Apple, bad week, down 1%, which is kind of just a little bit worse than the NASDAQ and the S&P, but Apple's also had a bad year. It looks like the Apple Vision Pro launch kind of flopped after, they paid some influencers for a couple days to try and pump it on social media, but you really haven't seen anything about it since then. So I'm imagining that not that many people are buying that thing. And, the iPhone cycle has been lackluster per media reports. So, Apple struggling a little bit in 2024. Nvidia, not a strong week, but the year has been so strong that nobody cares. And Tesla, down 6% for the week, down 33% for the year already. This is not that encouraging action. You can buy used Teslas for cheap now, much cheaper than what they were even last year or the year before. So maybe, 30, 40 grand gets you not new, but 30, 40 grand gets you a used Tesla that's not that used, but, that pressures the entire inventory of models, even the new cars. So, Yeah, Tesla not having a good year. And if we look at industries for this past week, pretty soft across the board with the exception of basic materials. So definitely kind of a risk-off tape. Utilities down, technology down 2.5%, services down 2.5%, healthcare down 3.5%, consumer down 2.5%. Top performing sectors, bunch of risk-off stuff, metals, nukes, commodity type stuff, oil and gas, copper, not the type of stuff that is exciting to the market. On the downside, we've got some, retail oriented stuff, apparel, department stores, personal goods, wholesale food, EVs, kind of spec tech, gene editing, spec healthcare, that sort of stuff was not really, we've got a handful of sectors that are down over 5% for the week, and they're all sort of either closely tied to the economy or speculative in nature from the tech side. So, this is not really that encouraging of a tape. If we look at the breadth from a market cap perspective, 1 to 5 billion cap stocks down 2% for the week, kind of in line with the Russell. 5 to 10 billion, same thing, down 1.75. 10 to 50 billion, down 1.5. 50 to 100 billion, down 95 basis points. 100 billion cap plus, down 113 basis points. So softness across the board, regardless of what market cap sort of swath you were looking at. Same thing, weakness across all industries and all market caps. Wasn't really that encouraging of a week. If we look at the intelligence for this week, semiconductors are bullish, cloud computing is bullish, bear China is bullish, so bearish China, and bull technology stocks, so NASDAQ should be okay this week. If we look at the downside, then this is I think cannabis. Let's check. Yeah, cannabis and this thing. Put this back. Okay, so cannabis downside, Coinbase bearish, Dow Jones Internet bearish, real estate bearish, VIX also bearish. So I'm seeing kind of more of a choppy week. Maybe there's some downside follow through from the prior week. The previous week sort of started soft, chopped around a little bit, then made a little bit of an up move on Thursday that kind of completely reversed and closed on the lows, and then Friday was kind of like a token up day. So you'll see our oscillator's still kind of bouncing around here in the midpoint of this range. I think you're going to see some downside follow through, at least to start the week, and then see if everything stabilizes and we start moving up again. There's been Fed speakers that have been, talking some trash or whatever, trying to take some air out of the market, but those haven't usually lasted more than a day or a couple days before everybody steps on the gas again. So we'll see how it goes this time around. Overall, market looks fine. Economy looks kind of fine. Non-farm payrolls was another beat. So, there's not any real bad stuff happening in the American economy. So stock market is kind of just going to gyrate around and overall move up. So, yeah, we'll see how it goes this week. Hope you guys have a good time out there. Don't blow yourselves up, and be back next week. Talk to you later. Bye.